to wrap. Money in the bank.
Rates are good. Pretty exciting.
You know why? Why?
Free money. You understand what I'm saying?
Welcome back to the program. This is your Real Estate Chalk Talk with the Hittner Group. The big money segment of the program, that's the one that everybody's waiting for.
They wait 3 segments to get here.
Wade through 3 segments just to hear the voice of Kelvin Kaemingk.
Better have some good news for us.
I have some great news today.
Good
rates
deal.
are low. You can replay the intro because rates are coming back down.
Super duper.
Sounds great. So we had actually a couple things happen this last week. ADP report just came out. New jobs under expectations, that's good.
Mm-hmm.
So we'll have the jobs report come out tomorrow, and we'll see that that probably will come under expectation. I love how they say we're finally seeing job loss. Like they were like, high five, job loss. I'm like,
so backwards.
Wow, so backwards, right?
Mm-hmm.
That we're high-fiving the fact that people are losing their jobs. It's an amazing time.
Been waiting for it for 2 years.
I know, right?
Yeah.
Finally,
they're not losing their jobs.
You know,
no.
Good thing we got these Bidens in here to ruin the economy, so that
it's crazy. So anyway, we're seeing some reprieve. The Fed came out and said they're probably going to pause. You know, I don't think they're going to make a move anymore because these numbers are coming out properly, which, you know, we could spend the whole show on manipulation.
they've been yabbering on about inflation to be 2%, though. Where's that at?
It's not.
Yeah.
So, but good news is we won't see an increase hopefully in December. And if we, you know, right now you're talking rates are probably high 6s. So it's a lot better than 8s.
Yes,
right?
it is.
I mean, we're down a point, so that's a great thing. And so now when you're doing
high 6s with no buy down.
Correct. Yep. So if we're doing a 1% buy down or a 2% buy down, now you're talking 4.99, 5.99. It's like, okay, now we're getting
things are conversation now.
Yeah. So, you know, we just have to be in a position where rates aren't stopping a transaction. Right. And we can because some of the things that why people aren't moving. There's a good article that just said what's held back the real estate market. One was rates, obviously, but the other is there's so much uncertainty in the world, right, going on right now. They have a lower rate and employment. Everybody's employment's a little unstable. You know, we see it with Loan Depot. We're the largest retail lender in the country, but yet we see it, and we see it in our industry. Everybody's laying off right now. It's just like there's not stability in employment, right?
Some of that layoff, though, is more of a, you know, let's get our ducks in a row now. Let's get our efficiencies back where they belong, and some of that. I don't think you necessarily have layoffs because they're.
Due to volume.
They're right-sizing the volume. Because of the volume.
Yeah, I disagree 100%.
Okay.
We did that 2 years ago.
Yeah,
but
the volume has continued to fall.
Yeah, but the people we're letting go now are great people. Well, I mean, Loan Depot we just laid some people off, right, as a company, and they're like, these are phenomenal people, but it's just like the volume doesn't sustain that. So I think what you're talking about happened initially, where it's like that bottom third that you can probably get rid of in any organization.
The GE method is get rid of the bottom 10%.
Yep, and you just got like that was good, but right now, man, you hate it, and you're like you feel this responsibility to have production because you're like, doggone it, we got to keep great people
because it's going to come back.
It's going to come back, and we're, you know, I think especially in our industry, we'll see it come back. You know, we had an uptick this past week. We have an uptick right now in our branch, just what I control or see. You know, we see a little uptick, which is great, and I think we'll come in if we can just get rates in the 6s. I think we'd be okay.
I see the first trimester of next year being actually not bad.
Yep, I agree.
You know, I don't think it's going to be like a pants on fire kind of a thing like it has been.
No, I think the spring should be pretty decent.
Yeah.
But
the timing of the kind of pullback in the interest rates, or reduction in interest rate it's good.
Yep.
So, you know, people are going to be distracted with the holidays, and seasonally in real estate, we seem to adjust every year, just like every other, in terms of overall sales activity and things like that. You know, we've been impacted huge by the interest rate change over the last 2 years. But with any type of reduction in rate in the 6s, those first timers are like, okay, we can stomach it.
Mm-hmm.
Yeah.
We went through a very long time in the real estate market where we were in those. I mean, in this current, in my life anyhow, in the last 20, 25 years in real estate, of sixes, 6, 8, 7, 5, and first timers getting in there. I understand values are a lot higher than they were at that time.
But so are wages.
Wages are not as high, but I mean, people could stomach it. And I think our first timers are a little bit later maybe than they were.
I think so.
When I was a kid first starting out in selling real estate, there was a lot of people that were like me at the time, young, single, buying real estate. Women have taken up a big chunk of that. Good for them because they're more responsible than we are as men. We screw around a lot longer in our lives and settle down.
Men are children until 30.
Settle down, but those dual income people, whether they have a child or don't, those are the first time home buyers right now. Like those millennials that are buying a little bit later than my kind of late Gen X generation was doing, I think. So they have dual income versus the single income folks.
Yep. And just to hit on kind of what that means on a payment, we were at 7.5 for a while. If you drop to 6.5 just on a median sales price of $400,000, it's $242 a month that you're saving just by that 1%. So now think if we can get them down to that 5.5 for the first year.
Right, and we can get some energy savings from our
473.
solar
We
over here, Sean, and
talk to Sean, but you know what sucks it all up?
Insurance
guy over here.
Insurance over there.
Yeah. See.
So let's touch on that real quick because we didn't touch on it earlier.
The homeowners insurance.
Homeowners insurance, killing it right
30% up.
And I know it's not your fault. We give you a bad time, James. I know you do a great job of. I love the fact that you're independent and that you find the best coverage
that's available.
That's
right?
available, but doggone it,
insurance is more expensive, correct?
It's more expensive. So talk through that a little bit, if you would. What's happening? Why?
Right.
Why are you killing my deals?
Sure, absolutely. I wish I had a better answer for you, but it's what you've heard over and over. It's inflation, and unfortunately, everything impacts your insurance premium. The cost of your materials, the cost of the labor, the cost to repair your car, the delay in the parts, the supply chain, all these excuses that I don't like to give any more than anyone else. But I think on a previous show we spoke about carriers now putting more restrictions. I had a situation, the deal got declined. I sent in an inspection report and they're like, no, we don't want this risk. That's never happened to me in 8 years.
They just don't want to write the deal.
Exactly, because they're trying to reduce their market share in Minnesota, and that's not just this single carrier. That's a lot of carriers. So what are they doing? I had a carrier last year. I wrote more business with them than anybody else. Now they're not even competitive because they're trying to shrink their market share. So
nationwide.
That's not the one, but they are putting stuff in there, but that's not what I'm referring to.
Yeah. So is that how they do it then? They don't just decline, they just raise their rates so that...
Some will do that. Some put pre-binding requirements, and that's what this carrier did. They said, we need to sign, it's a 1923 house in Minneapolis, we need to see the roof, the plumbing, electrical, and something else.
All
has to be
updated.
in a good furnace, and if it hasn't been updated or it's not up to code or inspection, and I sent the inspection to the underwriter. I didn't have an option, that was the only thing. He wasn't going to pay, and they're not going to lie. They're going to say, there were a couple concerns, therefore we're not going to take this risk. This specific company was too competitive in older homes, and so that's why they put that in place, because they were so much less than everybody else.
It does seem, though, like when you're doing an insurance, because everybody in our neighborhood, I'm in Woodbury, everybody got a new roof, a bunch of people got siding, it's like, and you're looking at the house, like you can hardly see anything, but then, oh no, if you look here at the angle, if the sun hits it, you can see a little.
Shine your
flashlight. And that's why the premiums are what they are.
Yeah, it's like, come on. You don't probably deserve new siding for $50,000. So stop, if there's a hole in your roof, you should.
So we've got carriers that are no longer replacing for cosmetic. So if you have like a siding that's dented, they're not going to replace it. If it's got a hole in it and it's not obviously able to, so that's changing. So they're having to decrease the amount of stuff that they're willing to pay for, or otherwise we're going to continue to see the trend of them raising prices.
Yeah.
So read the fine print on your policy to make sure that what you think is covered is actually covered.
Right.
And that's where it's important to have an insurance agent that you can actually talk to.
Absolutely.
And go through it line by line and say, look, just so you understand.
The other one that we had this week was a higher deductible and then it was a 2%
Wind hail.
wind hail. So talk about that, because my perception was 2% wind hail. Okay, 2% of my premium or 2% of the claim.
2% of the value, the rebuild. So if you have a $500,000 house, that's a $10,000 deductible. So carriers are putting those mandatory.
Hold on. Did you guys get that?
Yeah.
I did not get that.
Yeah.
It's a $10,000 deductible and it's 2% of the value of your home.
Of the dwelling coverage, but yes.
Yeah, of the dwelling
So
coverage.
more and more carriers are going to put that as a standard. Some already have it. Some are going to it. So yeah.
So if your roof's $40,000, you'll pay $10,000 deductible. I mean,
yes,
they'll pay 30.
yes,
You'll pay
yes.
the 10.
So you're still getting a benefit. They just want you to have more skin in the game.
Better than constantly being denied coverage. Period.
Correct.
Yeah.
Mm-hmm.
Exactly.
So, hey, I know we're running out of time. So if you want to have a conversation about where rates are at, give me a call, 651-231-2500. Again, 651-231-2500. There's multiple ways we can help you save your money with Sean, with James, with myself, with the real estate group. So
Hittner Real Estate Chalk Talk. Call us anytime, 612-627-8000, or log on to our website, hittnergroup.com.
You've been listening to your Real Estate Chalk Talk.